Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 27, which is a crypto instrument, KCS. In case you aren't familiar with the series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. And I also attach my Telegram channel, where I forward my videos from YouTube and TradingView, in case you want to get notified when I post new content. And yes, you are right, KCS is Kucoin token. If you don't know about Kucoin, it's one of the largest crypto exchanges in the world, with over 600 billion traded volume on the platform, with over 8 million registered users from more than 207 countries. And I like Kucoin because you can find coins or tokens that aren't available anywhere else. For example, KCS, which is Kucoin token, obviously, is you can find it on Kucoin, but you can't find it, for example, on Binance. If you don't have an account yet, I'll also include my referral link in the description below. And if you create one using my referral link, you will get 20% discount on your trading fees. So let's get started, right? For those who don't know, we always start from the higher time frames, weekly and daily, which we call our rejection time frames. And half of the work is done on the higher time frames, because then we know where we stand in the market. Are we overall bullish, bearish, or stuck inside the range, right? And as price approaches the lower bound or support area, we'll be looking for buy setups. Vice versa, as price approaches the upper bound, which is our resistance area, it can be horizontal or non-horizontal, we'll be looking for sell setups. And that's it. So half of the work is done here, and then we zoom into lower time frames once we know where we are in the market around support or resistance, to H4, H1, or even M30 to look for setups. So let's do it for this particular case. Our rejection areas from daily and weekly are a horizontal support and resistance, where we see many failed attempts to break above or below a certain level or area. Non-horizontal support and resistance, just like this channel that I drew, which are also known as trend lines. We also have supply and demand zones. For example, we have a demand area here because we had an aggressive movement upward from it, and vice versa, we have a supply zone here because we had an aggressive movement downward from it. So let's apply it for this particular one. Since it's a crypto instrument and price kept moving higher in an aggressive manner, we can't really find typical supply and resistance. So we'll go for the highs and the lows, and we'll also go for round numbers. And round numbers are different for every instrument. For example, Kucoin is trading between 0 and 30. And for example, EURUSD is trading between 0 and 3. Right, so you can't really apply the same logic on EURUSD here on Kucoin, because like on EURUSD, you can draw 1, 2, 3 round numbers, let's say, while on Kucoin, you have to draw 10, 20, and 30. And of course, like since it's trading between 0 and 30, then the strongest one is also like half of the distance, which is obviously the 15. Right, so the 15 and this particular one, which is for those who'd like to use Fibonacci, is the 50% retracement if you take your projection from this low to this high, right? But anyway, let's not use Fibonacci for this video. I'll make a video about it hopefully next time, and feel free like to mention or to ask anything in the comments or give me ideas about next videos topics. So as mentioned previously, we've got the 10. Let's do it quickly. We've got the 20. Let me do it. Here we go. And we also got the 30 round number. And as you can see, like price nearly approached it previously and then traded lower. And the 10, price respected it here, then broke it downward. It became resistance, then broke it upward, became support, and support again. And the 15, price rejected it here once, twice, and here we go, and then price broke it upward, and it's currently retesting it. So the 15 is not only a round number, but also covering these previous highs. That's how you make sure that your round number is like valid and like is relevant to the current price action. We also have the 20, as mentioned previously, was acting as a resistance, which was a previous all-time high here at previously. And then price broke it upward, so it's now acting as a support area. Then price broke it downward, it's now acting as a resistance area. So now we're done with our horizontal rejection levels. Let's go for our non-horizontal ones. And we're just from weekly, right? So look at how many info we can gather just from weekly to know where we are in the market. So obviously, we want to draw trend lines or channels or whatever you want to call it, wedge, broadening, rising broadening wedge, right? Or like symmetric triangle, anything we want to draw. We want to feel the market. We want to know where we are. We want to draw horizontal or non-horizontal supply and resistance that engulfs the overall movement, which I call the outer lines. So for example, in Kucoin, we can draw this trend line, which is the outer trend line covering the entire movement upward, engulfing the entire movement upward, also acting as a non-horizontal support here as well. As this price is retesting it, as you can see, price rejected it here. Since price is around it, we'll be looking for, obviously, for buy setups. And we always try to make an offset for it, right? So if you make an offset for it, we can see that the price is also respecting the offset or the upper bound. Okay, so we've got a horizontal, non-horizontal support, non-horizontal resistance, and price is rejecting the upper bound. So as price approaches this one again, like if you are trading it on spot, it's a good area to close your trade or have your positions. Anyway, I'll not go into risk management in this particular video. Let's focus on the price action. Okay, so that's how many info we can gather from weekly. And when you see like when you can gather so many info, chances are that if you zoom into daily, you can't really find much because you already like covered almost everything from weekly time frame. Oops, let me delete these two. Okay, fantastic. So now approaching the lower bound, right, which is here, acting as a non-horizontal support. Moreover, it's retesting this resistance area, which has been holding for a while. Then price broke it upward. Then it became, let me zoom in, support. And now price is retesting the support. We didn't have, or we don't have a close below it yet. So we are overall bullish, approaching a support, looking for buy setups, and we are looking for buy setups. We don't buy blindly, even though we are overall bullish, because we can't really know where the correction would end. Okay, let me give you an example. I don't like to go to the history, right? Because like everyone could say, like, this is what I could have done. That's why, as you can see from my videos, I always like analyze the chart live and like do a projection for the future. But let me give you just a quick example to compare the previous price action here to the current price action here, right? So we had a big, nice impulse movement pushing price upward from the lower bound to the upper bound. And then the sellers took over here and traded lower. So we've got our impulse correction, then price failed to make a lower low, instead made a higher low, which was an early alert that a potential reversal might happen, a potential one. And it was confirmed after the last high is broken upward, right? So a classic break of the last swing, a retest, and then the price took off. If you apply the same logic here, right? So we've got our first impulse, pushing price lower, broke below the previous low. So now the sellers took over after rejecting the upper bound, just like here. Of course, price action is different, but the logic is still the same. So impulse, correction, and then we had the next impulse, which is formed of many lows. And as you can see, starting from here, the bulls failed to break above the previous high, instead kept making lower lows and lower highs. So we are bearish, just like previously in a correction phase, waiting for the last swing high, just like here, to be broken upward. For now, the last swing high isn't formed yet. So this is our current or last swing high. So for the buyers to take over, we need to see a break above it, unless we have a new swing formed here, just like previously, failed to make a lower low, instead made a higher low. Instead, here we go, made a higher low. So I'm waiting for this to happen. Maybe, can't really know, because trading is reactive, not predictive. So don't like try to predict what might happen next. And like just like chess, if you want, for those who play chess, always wait for your opponent to make the first move and then react accordingly. So it's like the opponent in this case is the market, let's say, wait for it to make the first move and then react accordingly. So we are bearish, waiting for the buyers to take over. In this particular case, we can also, just like here, right? So we can draw a trend line which engulfs the correction phase. That's it. Let me make it in red. And as usual, let's try to make an offset for it. That's it. You can make it like this one, like lower, higher, and now we have our trend lines, which are engulfing the overall movement. And as per my trading plan, as mentioned previously, here we go. So 1, 2, and 3. Make it lower, make it higher to test like all the swings. So 1, 2, and now we're waiting for this swing to form this, for this swing high to form, and then we can buy on break output, especially that we have this 20 here. So price can go straight up from here, reject the 20, and then you can make it lower, make it higher, right? So it's an entire zone. It's not just a laser level. So we can make it higher or lower because we have wicks. But we've got the logic. We want a last swing high to fall and then a break above it around the support, which would signal that the bulls are finally taking over for the next impulse movement to start. Okay, so now we're waiting for this last swing high to form, and then as you can see here, we've got many support, many like minor support and resistance rejecting it upward. Here we go, now broken down. So it is acting at a potential resistance area. So we want a break above this area too. And then and only then we can confirm that the buyers are finally taking over. And this would be, for those who already know me from TradingView, highlighted as my trigger. And we're looking for buy setups because for those who already like see it, we are overall. Oops, we missed. How many L's we got? Yes. Okay, so our overall bullish, looking for buy setups, waiting for the buyers to take over because now clearly the bears are in control, making low lows and lower highs. So I'm waiting for a shift in momentum from bearish to bullish. That's for my trading plan. This is what I'm waiting for. Or the second possible scenario is if price kept moving higher from here and breaks above this area, then on the retest of it, this entire area will be looking for buy stops on H4. But for now, we don't need to zoom into H4 because everything is clear from daily time frame. And meanwhile, until the buy or the buyers kick in, or until this happens, KCS would be overall bearish and can still trade lower to dive inside this area before trading higher. In this case, we'll be also monitoring the price action here, and maybe if price forms a new swing high, then we'll be entering on its break upward. So that's it for KCS. Best of luck, and I'll see you on the next episode.